If you're a new trader, it's very easy to get confused with all the different price action concepts on YouTube. The reality is, to be a successful trader, you don't need 2-hour-long videos explaining price action. I've been trading for the last 7 years, and in today's video, I'm going to go over the 3 most important price action concepts that help me become a profitable trader. I'm going to keep this video to the point and simplify the concepts so you can understand them in depth, but quick. If you learn and apply these concepts effectively, you will start to see much more consistency in your trading. What are the 3 most important price action concepts to actually help you become a profitable trader? In this video, we're going to cover the 3 most important aspects of price action trading. Number 1 is liquidity. We're going to talk about where it is and exactly how to find it. Number 2, we're going to talk about price control. What is price control? Where are buyers? Where are sellers? And how should we be observing the markets? And finally, number 3, we're going to be talking about how to execute trades. Should we be predicting moves or should we be reacting to the moves that occur? And this concept will help you increase your win rate, but also get higher risk to reward trades on every single A+ trade that you take. So the first thing I want to talk about is liquidity. When we're looking at liquidity, we need to understand one very important concept, and that is external liquidity targets internal liquidity, which then goes ahead and targets external liquidity. Now, if you don't know what this means, let's talk about this. So when we have external liquidity, what does this actually stand for? When we're looking at external liquidity, that's going to be your swing high and low. And when we're looking at internal liquidity, that's going to be your pivot high and low / gaps. So when we are looking at an example, let's say this is the example that we're using right here, we can see that we have swing highs and swing lows. In terms of swing high and swing lows on this example right here, we can see that the external low or the swing low is down here, right? Because this is the lowest point of the chart. And then we have, of course, the high up here. This is the highest point on the chart. So this is going to be your external liquidity levels, okay? Your external lows right here and your external high is right here. Now, as we talk about external liquidity targets where? Internal liquidity. In terms of internal liquidity, where was our previous pivot high and our pivot low? Well, our pivot high was right here and we had a pivot low right here. This is going to be our higher high, okay? So our previous higher high and our previous higher low. In terms of momentum, because I am a momentum trader, how would I look to enter into this trade? Well, because I know we're at external liquidity right now, the next move that I want to see is the stock to retrace back into a previous high or internal high level, retest this level, show strong price action at this level, and then move back towards that external liquidity, right? So we went from external liquidity, we targeted that internal liquidity, we enter in here, our stop loss is simply the break of that previous higher low, and then we're targeting external liquidity or other key levels that we have on the chart on the higher time frame. In the most simple way, if you can understand this one concept, you will see much more consistency in your trading because you know whether you should be targeting internal or external liquidity. Now, to make sure you understand this concept, here we have an external low and we have an external high. This is an external low and external high because after pre-market, this is the high and low we made intraday. As we can see, the stock is so far respecting its external liquidity. What we would be looking for in terms of liquidity now is the stock to break above the external high right here, showing that the stock has a strong trend to one side, and then retesting internal liquidity for a move to the upside. If you haven't noticed by now, this is also the 5-minute opening break and retest strategy. However, now I'm explaining why the 5-minute opening break and retest works. So let's play out this trade. And as we can see here, what is happening? Well, we broke the external high right here. This is the break of the external high. And now we're retesting what? We're retesting the previous internal liquidity. In terms of internal liquidity, you could be looking for FVGs or order blocks. I have full videos explaining those as well. But when we come back to retest, we are retesting in that internal liquidity right here, right? So this is the retest to, of course, the downside. We would be entering into a short position because we know that we took out external liquidity, we came back into internal liquidity, and we can simply target just low of day right here with our stop loss a little bit above this previous pivot high. So let's enter into a short position and see exactly what happens. And as we can see, we were able to capture this move because we know that it had external liquidity. It broke the external liquidity, targeted internal liquidity. And so the next level that I had to go to is once again to that external liquidity to fill the previous orders. Now, as I mentioned before, this also coincides with the 5-minute opening break and retest strategy, which I've talked about in previous videos. However, now you understand why it works. It works because first we target external liquidity, then we target internal liquidity, and then we want to make a move back up to external liquidity. And in this case, it was just a short position that we took. Now, of course, at the end of the video, I'm going to be combining all the concepts that I talk about into one example. But for right now, all I want you to understand is once you break external liquidity, your entry criteria is internal liquidity right here. And then you target back that external liquidity, right? So in simple terms, you're looking for a low of day break, a retest of the previous 5-minute break and retest, and then your profit target is going to be low of day again, and then continuation, of course, if you can get that. So that's liquidity. Now let's talk about how we can understand price control. In order to understand who's in control of the market, buyers or sellers, we need to look at the candlesticks. The candlesticks will tell you the exact story you need to know to enter or not enter the trade. In the example that we have here, this is a very similar example to the last one where we broke the previous low, right? So we broke that external liquidity. And now that we broke that external liquidity, we want to come back into internal liquidity and then make a move to the downside. Now, in the previous example, we had weak price action near this level. In this example, I want to show you how you can understand if buyers or sellers are in control. And based off of that scenario, we can enter the trade. So let's play out this trade. Right here, what do we see? Well, the problem that I have in this scenario is very simple. This candle right here, this red candle that we put in at 947, well, this indicates that sellers were stepping in. Why? Because we closed with this wick. This upper wick shows that buyers try to bring the stock up, but then sellers brought it right back down near this previous support, turned resistance, and also internal level of liquidity. However, when we actually got into the level or the retest level that we're looking for, which is this internal liquidity, what is happening? Well, the stock opened up here. We see that sellers try to bring it down, but then buyers came right back in and closed the stock with the green candle, but also a very strong bullish candle. Why? Because they brought it all the way up to highs and were able to close it right at the top of that previous internal liquidity. So for me, I wouldn't enter into the trade just yet because so far price has not confirmed to me that we are strong enough to take this trade back down to this previous external liquidity low that we made down here. So what I would be waiting for is more weak price action near this internal liquidity. However, if we break out of this internal liquidity to the upside, then I would not be interested in this short position anymore. And this is exactly how I'm able to have such a high win rate, by understanding who is in control, buyers or sellers near the internal liquidity levels when I'm entering. So let's play out this trade. And as we can see right away, we closed a very bullish candle to the upside. Therefore, we're back in the range. And now I would not be interested in a short position. What I would be interested in now is if we can break this previous external high. So I would be looking for a break of the external high, looking for it to retrace into this internal liquidity level, and then of course, target new external highs. So let's keep playing out the trade. As we can see here, we did hit this external high right here, and now we're retesting within that external high. However, I'm not going to enter into the trade just yet because I need that break of the external high first for the retest. We can see we finally got the break of the external high. Now this candle validates that we are moving to the upside. Buyers are in control. In terms of the retest, we can retest this previous pivot high right here in terms of internal liquidity, or we can come back into this previous level right here for a push up. So let's see exactly what happens as we play out this trade. And right here, what I actually see is we came back, we retested this previous high right here, which is the external high coming back into internal high. And now we can look for a potential move to the upside because the candles that we're closing here, you can see that they're much more lower wick dominant, which shows that sellers are trying to bring the stock down, but buyers are aggressively pushing it back to the upside. So to enter this trade here, because we know buyers are in control, because we of course swept those lows, came back, made new high of day, and now we're retesting this previous previous high, we can enter this trade right here. And our stop loss in this case scenario can simply be a break of this internal high. After high of day, the next external level is going to be that 255 psychological number. This is a higher time frame swing high and also a psychological number. We enter into the trade here and see exactly what happens. So as we can see here, we just hit that profit target, and that was simply by understanding who's in control, buyers or sellers, and where we can enter based off of external and internal liquidity. Now let's go over to the final step of price action you need to understand, and then finally we'll end off with an example tying all the concepts together. Finally, step 3 is knowing how to execute. As a trader, our main job is to react to the market, not predict the market. A lot of traders come into the day and they already have their predictions of what's going to happen intraday. And because of that bias, let's just say a trader wants to go long intraday. Well, if the market sells off all day and you want to go long, you'll try to buy the bottom every time and you'll be fighting the trend. Therefore, the probability of the trade that you're taking is already going to be much, much lower. So for me, I never try to fight the markets. I will only react to the price action that I see intraday. Now, some days I may come in with a thesis, but that does not mean that thesis is correct and I won't enter the trade until I see my 3 crucial price action steps. Now, one example I want to show you in terms of reacting and not predicting, here we have pre-market high. Now, if you have watched my pre-market high and low retest strategy, you know for pre-market high, all we're looking for is a break, a retest back into pre-market high, and then a push to the upside. On the higher time frame, let's say the stock is trending to the upside as well. Well, now you're coming into the day with a bias that the stock should break pre-market high and retest. Now, for me, sometimes I will come in with a thesis. The difference between a bias and thesis is very important to know. A bias is when you're coming to the day and with certainty you know that this stock will do exactly what you want it to. A thesis is an if-then statement, which means if the stock breaks pre-market high, then it should retest pre-market high, looking for a move to the upside, and therefore I can enter on the pre-market high retest. So those two are very different. One is predicting the market, where the other one is reacting to the market. Let's see exactly what happens. As we can see here, this stock broke the pre-market high and retested. Now, this is an example that we've seen before with the pre-market high retest. And based off of the thesis and how we should react, well, we should enter into a long position here. So we would enter into a long position here. Our profit target here could simply be a 2R multiple, and our stop loss here can simply be this previous pivot high. And this is a good trade based off of the thesis that we had intraday. Whether you had a bias or a thesis, it still worked out. And let's play out this trade. And as we can see here, unfortunately, this thesis did not work out, and that is completely fine because at the end of the day, we know trading is all probabilities. Sometimes your trade will work, sometimes it won't work. It is all to do with probabilities. You are not smart if your trade works, and you're not dumb if the trade doesn't work either. It's all probabilities at the end of the day, and understanding your win rate along with your R multiple over a long period of time is how you're going to be able to sustain profitable and consistent results. Now, in terms of this example here, the reason I want to talk about predicting versus reacting is because we reacted based off of the thesis we had intraday, which was the pre-market high and then the retest. And unfortunately, it didn't work. And as we can see, we lost $670, which is absolutely fine. Now, we're going to close this position here and we're going to keep playing out this trade. If we keep playing out this trade, we might have another potential entry criteria that we could potentially trade off of. So let's keep playing out this trade. So in this example here, what is happening so far? Number one, we had this swing low and the stock actually just broke that previous swing low. Because the stock broke that previous swing low, we now know that the stock has to return to an internal level of liquidity. The internal level of liquidity we have here is this consolidation period along with this up close candle after this downtrend breaking this previous low. Therefore, we want the stock to retrace back into this internal liquidity to, of course, continue making that external liquidity to the downside. The reason I'm showing you this is because we're once again reacting to the price action. We are not predicting the move. If this retest happens, then I will enter into the trade. If the retest doesn't happen, then I'm not entering into the trade. This is the thesis that we have. If I had a bias going into the day that I am long on this because it broke pre-market high, then I wouldn't even be able to enter a trade like this. So it's very important to come into the day with a strong thesis, but not a bias where you're not able to change and react to the price action that's showing on the screen. So let's keep playing out this trade and see if we get the retest of this previous pivot low. So as we can see here, we actually came into this internal level of liquidity 2 times. The first time this price action, like I talked about earlier, where buyers and sellers are in control, it wasn't the strongest because we were creating higher lows and this candle did close inside that range as well. However, the second time we broke this previous higher low as well, and we put in an upper wick candle, and the next candle closed below the internal liquidity. So we can look for a short position here where our stop loss is simply above this previous level of internal liquidity, and we're targeting external liquidity. So notice how my thesis has now changed to, if it broke into the internal liquidity, then I'm looking for external liquidity based off of the price action that I am reacting to. I am not predicting this price action. I am simply reacting to it, and now I will let the probabilities do the work for me. So let's enter into a short position and see exactly what happens. And as we can see here, this trade worked extremely well to the downside by understanding external liquidity coming back into internal liquidity and the market structure break to the downside. Now, this trade made $1,300. And as you can remember from the previous trade, we lost $670. Therefore, based off of both of these trades on this specific day, we still made $630 by simply reacting to the price action on the chart rather than predicting the moves before they happen. So those are the 3 most important price action steps that you need to follow. Now let's combine all of them into one example so you can really solidify all these concepts. So for this final example, we're going to be using the 5-minute opening range break and retest strategy. If you want the full in-depth guide to the strategy, the link is going to be in the description, or you can just search up Scarface Trade's 5-minute opening range retest. However, let's play out the first 5 minutes and see exactly what happens. So here's the first 5 minutes, and what we do now is we mark out the 5-minute high and we mark out the 5-minute low. Now, like I said, for step 3, we do not predict, we simply react. So if the stock breaks above this previous high and it retests for a move to the upside, that is going to be the trade that we take. Or if it breaks below this 5-minute high and retests, that is going to be the trade we take to the downside. Notice how there's multiple factors of the other 2 steps that I have within the thesis of this trade. For example, number 1 is liquidity. As we can see, when the stock breaks above this level right here, what is that? That is going to be the external liquidity, which is the high being taken out. And after external liquidity, what happens? Well, we come back to retest the internal liquidity right here. And of course, when we come back into that internal liquidity, what do we need near this internal liquidity? We need strong price action. We need to see who has control of price, and therefore we won't enter until we see confirmations of buyers being able to step up near this previous liquidity level. So if you have watched the 5-minute break and retest strategy, now all of a sudden it makes much more sense, and you're going to increase your win rate even more because you understand these 3 price action concepts. So let's play out the trade and see exactly what happens. Here we can see the external break of liquidity. Therefore, this shows that the buyers are in control, and now we're looking for the retest. As we can see, we just came back for the retest, and look at this strong price action candle off of this previous high. So we made external liquidity, we came back into the previous liquidity, and as we can see, this strong price action candle, sellers try to bring it back below this previous high. We weren't able to, and we closed with the strong hammer stick candle. I would be looking to enter the trade here because I am reacting to the price action that I see. We would enter into a long position here with my stop loss simply at the break of this previous pivot point right here, and my profit target being at this external high right here. So let's enter into the trade here and see exactly what happens. And as we can see here, we just hit that profit target for a $505 gain by understanding these 3 simple price action concepts. Number 1 is liquidity, number 2 is price control, and number 3 is knowing when to execute. We're not predicting, but rather we are reacting to the price action that we see. So I hope this video helped you. If it did, make sure to leave this video a like. If you have any questions, put it in the comments down below. Make sure to subscribe to the channel. We are so close to 100,000 subscribers, and my main goal with this channel is to give you the most valuable day trading content in a simplified way. So make sure to subscribe, and I will see you guys next week with a brand new video.